Good morning, welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 12th of March 2019. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. And first of all, I just want to flag the resurgence in cable, the British pound against the US dollar overnight. The British pound trading just above 132 this morning, up by around 0.44% over the session. However, that doesn't tell the whole story. We really need to look at the monthly change to get a sense of the volatility that we've seen in cable over recent sessions. We'll look at some of the reasons behind that move momentarily. We've also seen gains for the New Zealand dollar against the US dollar, the Kiwi taking 0.21% off of its US rival. The Mexican peso also been able to get on the front foot against the US dollar with gains of 0.14% overnight. The Rand, perhaps the best of the others, adding 0.38% to its recent gains against the US dollar. And the dollar index itself down on the session, down by 0.14% over the last 24 hours. Okay, what's on the calendar then? Events that may move the markets. We've got an ongoing meeting of European ministers today, second day of those meetings. We've had already out of Australia home loans data and investment lending for homes data for the month of January. A mixed set of data, though the home loans number was pretty disappointing. Ongoing, a speech at the moment by the Reserve Bank of Australia's Governor DeBell. And at 9:30 a.m. we will have industrial production, manufacturing production and GDP data for the month of January out of the UK. That'll be followed at 10:45 a.m. by the second of the day's central banker speeches, this from ECB board member Lautenschlager. At 12:30 we jump over the Atlantic for a raft of consumer price index metrics out of the US for the month of February, so a real chance to get a handle on consumer inflation in the US there. And then at 13:45 our final central banker speech today from the Fed's Brainard. A little later on this evening we will have a vote from the UK Parliament on Brexit. No specific time for that, but historically somewhere around 7:30 to 8 o'clock in the evening. And at 23:30 we shall have the Westpac consumer confidence data out of Australia for the month of March. Okay then, breaking news and comment that's caught my eye overnight. First of all, US equities shrug off weak economic data to rally sharply, buoyed by a series of M&A deals announced yesterday. You may recall that we wrote recently that a poor non-farm payrolls number was actually likely to be positive for US equities over the medium term, and that's perhaps what we're seeing in yesterday's rally. Pick of the day's headlines: UK PM Theresa May has won legally binding assurances on the backstop arrangements from the European Union and will present her new Brexit plan to Parliament today. MPs will then get a chance to debate on and vote on the new revised terms. That vote likely to take place this evening, as we said. Meanwhile, Australia's NAB Business Confidence Index fell to its lowest reading since January 2016 during the month of February. The index fell to a reading of just 2, below forecasts of 3 and the prior read of 4, so further pressure perhaps being humped on the back of the RBA there. Meanwhile, Brazilian auto production jumped by an impressive 29.9% month on month in February to some 257,000 units. It wasn't just a seasonal spurt, however, as year-on-year gains were also up but 20.5%, so at least one section of the Brazilian economy appears to be firing on all cylinders. Okay, food for thought and something to take away with you into the trading day and beyond, and why not think about this? President Trump will shortly present a budget proposal to Congress against a background of rising government debts and falling government revenues even. Decisions made now will have potentially serious consequences for future administrations in the US. And the chart on our right breaks down government spending in the US. The areas in black are mandatory, things they have to pay for. The areas in pink, discretionary programs there, and the area in purple, interest repayments. As you can see, as we move forward out to 2029, those interest repayments grow sharply. Bloomberg believes that in the period 2020 to 2029, the US could spend as much as $7 trillion on interest expenses. So that's a significant sum of money that could obviously be spent elsewhere, and I'm sure there'll be big debates in Congress about the rights and wrongs of President Trump's proposals for budget and government spending. Okay, it's risk warning time. Please take a moment to read this risk warning. Trading CFDs and foreign exchange and margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representatives who will be happy to take you through those. And do take the time, as I say, to read this risk warning thoroughly. Thank you very much for your time today.